Hi everybody, how you doing? My name is Martin Mesa with Rate One Financial. Welcome back to another episode of Mortgage Mind. Today it's all about loan contingencies. Okay, so you're out there looking for a property to buy, you find the dream home, you submit an offer, voila, your offer gets accepted, you're in escrow to buy the property. Chances are you're going to be a homeowner legally in 30 days or less, most likely, in most places. And you're all excited. But let's say something goes crazily wrong, unexpectedly wrong in that escrow process, and all of a sudden you don't think it's a good idea to buy that house anymore, and you're looking for a way to get out of that transaction, right? Because you don't want to buy the house anymore. So, to the rescue for you as a buyer are what's called contingencies. And there's different types of contingencies, but what I'm talking about is the loan contingency. So let's say you're a buyer and you get into escrow, they accept your offer, and you need a loan to buy that house. You don't have all cash to buy it. If for whatever reason you can't wind up getting the loan you were expecting to get before you got into that escrow, into that transaction, and if you have a loan contingency in place, embedded in writing in the contract, you can actually back out of that transaction and be entitled to receive your earnest money deposit back to you as the buyer. Rewind a little bit. When you first get your offer accepted on that property, one of the first things you're going to have to do as the buyer is write a check or send cash money out of your pocket to the escrow company for that earnest money deposit. Usually that's about 3% of the sales price. So let's say you're buying a house for 500,000, you're going to be asked to make an earnest money deposit of, in this case, 15,000, which is 3% of that, a sales price. That's pretty standard and customary where I'm at. And so you got to put that money into escrow, and then once it's in escrow, you are not guaranteed to get that money back if you have to wind up canceling that purchase transaction for whatever reason. But if you have a contingency in place in writing in your contract, that contingency can protect you as the buyer and give you different reasons to cancel and back out of the transaction if something goes awry, and still be entitled to get that $15,000 back. If you cancel that transaction without a valid contingency still in place, you might not get that money back. The seller might keep your 15 grand and you're just out, okay? So that's what the contingency is for. There are different types of contingencies that are there to protect the buyer. The most common are the loan, the appraisal, and the inspection contingency. But they're all there to protect the buyer. And you, as the buyer, can ask for as many contingencies as you want when you submit an offer on a house. It's up to the seller, well, it's up to both you and the seller to come to an agreement as to whether or not the seller is going to give you those contingencies and for how many days you're going to have those contingencies available to you to use in case you need to back out. So that's the loan contingency. Make sure you get one in writing in your contract for a good amount of days. And your realtor and lender can talk to you a little bit more about that. But if you need a loan, it's always good to have a loan contingency in place. So as you're out there looking for property to buy, make sure you understand your contingencies and your loan contingency. If you do need a loan, make sure you understand how that protects you, how it works, and how you're going to be able to use it in a transaction that you get into to buy a property in case you need to use it to get your money back if you have to back out. Okay, so hopefully that helps. If you have any questions about that, feel free to give us a call, give your local lender or realtor a call. I'm sure they can help you out with it more. Got to understand that stuff if you want to be an informed buyer out there. All right, they're there to protect you, so make sure you understand your contingencies and use them. All right, you guys take care. We'll see you guys on the next episode of Mortgage Mind. If you like what we're doing, please like and share with your friends and family.